Dear students, today's topic of discussion is banking innovations. The objectives of this particular chapter is to learn the changing concepts in banking and to learn the global trends in banking, technological advancement in banking, and products and services which are provided in banking. See, when you come to products and services, there are two types of products provided by the banking system. In that, one is conventional, another one is modern. In today's class, we focus on the modern banking products and services provided by the banks. The conventional products and services are offering savings bank and current accounts, and providing loan facilities, and safe deposit lockers, and purchasing government bonds, and trust and financial property management services of the bank. These are the conventional banking products and services. We focus in today's class mainly on the modern products and services. They are credit and debit cards, mobile banking, internet banking, priority banking, ATMs, EFT, bank assurance, mutual funds, investment and trading facilities, wealth management, and investment banking. See, coming to the introduction part of the banking innovations, banking in the 21st century has undergone the significant transformation with the advent of technology. In the recent times, the banks have also focused on outreach. The government is ensuring every citizen in India must possess a bank account. Further, there is increased use of technology for all transactions like salary disbursement, tax refunds, government schemes. The special schemes are initiated in the banks to serve the customer. Conventional banking resorted to savings and credit, which extended to various types of loan based objectives and financial instructions. Today, apart from conventional services, the banks are also including non banking services like safe deposit lockers, insurance, mutual funds, and other schemes for the sake of customers. Thus, the bank is speeding up the various activities in technological area. Indian banking system has elevated to a well-developed structure in the recent years. A mix of classes, public sector, private sector, foreign, cooperative, and regional rural banks is found, and they have been quite competitive in providing services to the customers. The Reserve Bank of India is the apex based for all the banks and banking transactions in India. RBI is also aiming towards global practices to make banking services attractive and reach customers all over the country, which will lead to a strong mechanism. See, now let us go to the modern services provided by the banks. Number one, as I have already told, credit card. Credit card is a plastic card provided by a banking institution to a cardholder. It generally comes with a credit limit to which the customer can utilize to purchase any goods or service. Credit cards permit the holder to purchase any product or service, and the payment can be done over a period of time in installments. The amount payable can be carried over to a successive billing cycles. An interest is charged on the amount due, and this can be saved if the entire amount is paid at once. Credit card purchases become payable after a specified free credit period during which no interest is imposed. Credit card can be used internationally, meaning that card holders belonging to card issues in one country can make purchases at another country. See now, let us learn something about the debit cards. A debit card also falls under the plastic money category, but the function of the card is different. The debit card holder is not allowed to any credit. Any purchase made will result in debit of the holder or customer's bank account. The transaction is rejected if the amount has insufficient balance, which is a benefit for the customer to avoid credit. This card is closely similar to a ATM card. A PIN is provided for the customer to make withdrawals at ATMs or purchase at the vendor. This type of card is beneficial and safer to a customer as it does not allow any outstanding balance to be created or make any credit purchases. Only the fund in the customer's account is allowed to be used. Next important thing, second important modern product services according to the table is mobile banking. Mobile phones have become the primary mode of the wireless communication today. Rapid use has resulted in wide network operators and their services. Banks have identified this global medium of communication and decided to cater to the customer's need through the mobile or smartphones. All banks, after gaining the permission from the Department of Payment and Settlement Systems under RBI, are allowed to give mobile banking services to its customers. The technology involved and safety aspects are taken care by the RBI and concerned departments involved as mobile banking to deal with the funds and bank accounts and the customer's interest must have to be protected. So this is the second important thing. Coming to the third modern products and services, we have internet banking. Banks have constantly been in the forefront of utilizing technology to enhance their products and services with efficiency. Many channels of internet have been used, such as dial-up network, private network channels, and wireless devices such as Wi-Fi, peripherals, dongles to deliver banking services. Internet banking in these days has gained importance as it can be used in wide area of devices such as PCs, laptops, tablets, mobile phones, PDS, etc. See, the next important product is priority banking. Priority banking, also known as privilege banking, is a recent development in Indian banking sector. Few private sector banks which adopt the international methods of banking has picked up this trend where service is given to a set of priority customers based on the average fund balance they maintain in their accounts and years of relationship with the bank. Also, anybody who wishes to avail and enjoy such services can apply for this service, which comes with a cost attached to it sometimes. Some of the benefits which a customer can avail under priority banking are dedicated service area in the branch eliminating queues, premium debit and credit cards at free of cost, concessions in safe deposit locker rent, access to excessive laundries, relationship benefits across branches in different locations, free door-to-door check pickup facility, client relationship managers assigned to take care of all banking needs. See, let us go to the next important product services. That is number 5, ATM. ATM or automatic teller machine is a technological replacement for a human or physical teller at banks. Plastic money or credit and debit is used to perform financial tasks like withdrawal, balance inquiry, mini statement, etc. In the recent days, private banks and few nationalized banks have included services like deposit of cash, fixed deposits, bill payments, check deposits, etc. in the ATM to make it easy and quick for customer to perform those tasks and avoid long queues at the branch. Next important thing is bank demand drafts. Section 85 of the Negotiable Instrument Act defines a bank draft as an order to pay money drawn by one office of the bank upon another office of the bank for a sum of money payable to order on demand. For remitting money from one place to another, banks issue demand drafts on their branches spread over the entire country. It is issued on the request of the customer who has to make a guarantee payment, that is in circumstances where the payee wishes to be certain that the check will be paid upon presentation. After cash, the next best thing is the bank, which avoids the necessity of having to carry sums of money to more effective payments. See, the next important point is we have to understand mail transfer. This is a request acknowledged by one branch to another branch of a bank to pay a prescribed amount of money to the addressed person, and all this is done by sending mail which is authenticated within authorized signatories. The deposits the amount along with a commission attached by the remitter at the remitting branch. On receiving the mail, the branch at the receiving end will issue the pay order or send the payment to the account of the beneficiary. This system eliminates the use of checks and DDs for making payments. So the next important thing we have is telegraphic transfers. Telegraphic transfer procedure is a similar to mail transfer, but instead of mail, a telegram, telephone or telex is used as the mode. The charges for remittance are high as compared to DDs and mail transfers. It is not a negotiable instrument. Next important point what we have is magnetic ink character recognition, MICR. MICR technology has been introduced by the Reserve Bank of India for speeding up the check clearing process. This process involves the following steps: standardization of quality, size, printing of the checks or drafts with a suitable space for encoding information at the bottom. Encoding in magnetic specific details on the check itself to facilitate mechanical sorting. The code line contains the following information. First 6 numbers indicate check number. Next 3 numbers indicate city code. Next 3 numbers indicate bank code. And the next 3 numbers indicate branch code. After some space, there is number of transactions code, whether the transaction related to a savings or current account. The magnetized portion, when put under MICR equipment, allows the instant readability and identification. MICR checks should not be holded. Pins, etc. should not be put at the left corner of the check. The signature of the drawer, rubber stamp, etc. should be affixed above the code line. See, the next important thing is we have is EFT, electronic fund transfer. Electronic fund transfer is a system to help the banks to offer fund transfer services from one account to another and one branch to another where EFT facilities are offered. The main modes of fund transfer currently are DD or demand drafts, telegraphic transfers and mail transfer. The DD is a paper-based mode where DD has to be obtained from the bank for the required amount and send it to the beneficiary. The beneficiary has to send the DD to his or her bank to collection. The time taken for this process is more and physical forum is another limitation. Telegraphic transfer reaches the funds to the beneficiary on the same or next day if the accounts of both remitter and beneficiary are in the same bank. The EFT is an interbank oriented system where the RBI is the intermediary between the banks and monitor and facilitate interbank fund transfer. The customer can request their bank branches to remit the funds irrespective of affiliation of the beneficiary's bank. Next important thing we have is real-time gross settlement, RTGS, and National Electronic Fund Transfer, NEFT, NEFT. RTGS or NEFT are the electronic fund transfer system conceived by RBI to facilitate an efficient, secure, economical, reliable, expeditious transfer of funds between the participants in the banking sector throughout India and to relieve the stress on the paper-based funds. The facility has been made available to all our branches. Ministry of Finance has advised bank to promote electronic payments like RTGS and NEFT and to reduce the issuance of the checks for payments and increase usage of alternative channels like internet banking, mobile banking, and IMPS. These and other channels like ATMs, internet banking, and mobile banking enable banking transactions to be carried out, transferred, and in a secured manner without there being a need to visit the bank branch. Considerable hardware and software investments have been towards development of these alternative channels and optimum use of these channels. Optimum use of these channels would provide more convenience to the customers apart from reducing the workload and counter pressure at the branches. Indian financial system and the beneficiary account number intra alia are the most important information required to be furnished by the remitter. So the next important product offered by the bank is that is nothing but bank assurance. Bank assurance is a term arrived by combining bank and insurance. This refers to sale and distribution of insurance and allied products and services through the banks and its channels. Another term used is all finance, which was originated in European countries. It is known as a method where banking and insurance needs are met by the financial services. Next, we will go to the next benefit offered by the bank or the product and service, mutual fund. Mutual fund is an agreement between the asset management company or banks with the investors where funds are collected from customers or investors and creates a pool of funds raised out of financial objectives. The pool of funds is then invested in various classes of assets to achieve financial gains and distribute it among the investors. The asset management companies or banks charge a fee for this service on theirs. A mutual fund creates and offers various schemes for different class of people and objectives. These schemes are managed by the fund manager or professionals. Mutual funds generally invest in equities, debentures, bonds, etc. Nowadays, in recent days, mutual funds have started investing in bullions. So the next important product or service is wealth management. It is a modern process where the wants and needs of the clients or customers are met by providing appropriate financial services. It is a type of service where professional investment, tax strategies, legal advisory, portfolio management, etc. is combined and offered to the clients according to their need. Next important product or service is investment banking. Investment banking is a division of banking service which concentrates on capital creation for its clients. They provide equity and debt securities, advisory and underwriting services to companies and individuals. They also guide companies in going public by issuance of stock. So, these are some of the important products and services offered by the banking system. So, just to conclude this, there are two types of products and services offered by the bank that we have already discussed. One is conventional, another one is modern. So, we have to focus more on modern facilities and banking innovations.